Well, friends, so now we already know various rates of taxes. We know the basis how income is chargeable to tax, how to compute total income. Also, we know the concept of total income already. We know. Now it is time to understand what is the meaning of income. This is a very important definition. We'll be learning that thing. What is income? What is capital receipt versus revenue receipt? All these concepts we are going to learn shortly. Going to share the screen with you. Yeah, you are seeing the screen.
Yes,
Yes,
sir.
sir.
Okay.
Yes,
Yes,
sir.
sir.
I am showing you the definition of income. It is provided in which section? Can anyone tell me? Suppose you
Section
want
2,
Section
subsection
2.
24.
section 2, subsection 24. Okay, I am showing you in the slide, but again, you also need to make yourself familiar. You can refer to Income Tax Act 2006, 1961. Uh, how you can refer to? You can go to the Income Tax Department website and find out Income Tax Act and see section 224. You can find out what is the meaning of income. As you can see, what it is written, income.
Includes.
Now, what kind of definition it is? It is an inclusive definition or exhaustive definition?
Inclusive
Inclusive.
definition.
Inclusive.
Inclusive definition. That means you see, I have listed out all these items, but this is an inclusive definition. There might be many more incomes which are not included here. This is an inclusive definition. Okay,
Yes, sir.
right. Just I have listed here 23 items for your benefit. But you see, since it's an inclusive definition, it includes anything. Income includes profit and gains. You already know what is profit and gains. When doing
Yes, sir.
some business, you can get some profit, or doing some other transaction, sale and purchase, you can get some gain. Dividend income, companies distribute their profit by way of dividend. Dividend is also an income. So income includes profits, gains, dividends. Voluntary contribution received by any charitable, religious trust, fund, university, educational institute, hospital, etc. So all these voluntary contributions are also income. Perquisites or profit in lieu of salary. So perquisites means certain non-monetary benefit. That what is profit in lieu of salary? There is a specific definition. When I'll be teaching you the salary chapter, at that time I'll be explaining what is profit in lieu of salary. Okay, at that time I'll be explaining you. It will take some time. Okay, or if you want to understand, already salary chapter video is there in our website, in our YouTube channel. You can see that thing, salary chapter. So the perquisites or profit in lieu of salary. Perquisites means non-monetary benefits given to an employee. They are also income. Special allowances. On salary chapter, we'll be learning what are the special allowances. Some specific allowances are allowed to different employees. So they are also income. Allowances to meet personal expenditure. That is also income. Benefit or perquisites convertible into money are not obtained by a director, relative of the director, or person having substantial interest. Person having substantial interest means any person who is having 20% or more voting right. Okay, so let us say in a company, one shareholder is having 20% voting right, then he is a person with substantial interest. So if he is deriving some benefit, then that is his income. Okay, in case of partnership firm, he's having more than 20% or more. Let us say his share of profit is 20% or more, then he's also a person of substantial interest. The benefit or perquisite, convertible in money or not, obtained by a representative assessee. Okay, so any benefit obtained by agent, etc., they are also income. Some chargeable under section 28, 41, 59. We'll be learning all these things under different chapters and different heads. All of them are incomes. Capital gain is also an income. Profit and gains from business of insurance by mutual insurance company or mutual insurance cooperative society. That is also an income. Banking income of a cooperative society is also an income. Winning from lotteries, crosswords, puzzles, race, card games, gambling, betting, entertainment programs in electronic media. All these incomes are, all these receipts are income. Some received from employees as provident fund ESI, superannuation, then welfare fund contribution. These are some funds to which employees contribute or employer collects from employees. So for the employer, these are incomes. Okay, incomes. And when employer will be depositing, employer can claim it as an expenses. But when it is received by the employer from the employee, that is an income.
Yes, sir.
Some received under key man insurance policy. So in an organization, there might be certain important persons who are called as the key man. And if any compensation is received from insurance company against this key man insurance policy, that is also an income. Then amount received for
Sir,
not
14th point.
14 point. Okay, 14 point you see some received from employees as provident fund, employee state insurance, superannuation fund, welfare fund, etc. You see, these are certain funds. Normally what happens? Let us say you talk about provident fund. What happens in many organizations? Certain money is contributed by employees, certain money is contributed by employer. Is it not? Employer contributes and employee contributes. Then employer adds some administration expenses, etc., and deposits with PF authorities. Okay.
Yes, sir.
So first, what
Sir,
happens?
superannuation means?
Superannuation means pension.
Okay, sir.
So you can call it as pension fund. Okay. Now let us say employee salary is 30,000. Let us say you are deducting 3,000 rupees for some fund, for superannuation fund. The moment you deduct it as an employer, that becomes your income.
Yes,
Okay,
sir.
that becomes your income. But when you are depositing, that becomes your expense. So if you are not deposited, you have deducted but not deposited, that will be treated as your income and you need to pay tax on this.
Yes, sir.
Got it?
Yes, sir.
Then amount received for not carrying out any activity, not sharing patent, trademark, etc. So sometimes some organizations, they enter into some agreement with some people and they pay some money. So this much of money is paid to you. So not to compete with us. Okay. Then that income, that money which is received, that is also an income. The fair market value of inventory, which is converted into or treated capital asset. If stock in trade is converted into capital asset, then stock in trade's fair market value is also an income. That means as if stock in trade is sold. If gift is received in above 50,000 rupees, except from relatives, that is also an income. Consideration for issue of shares. If shares are issued in excess of fair market value, suppose fair market value of the shares is 600 rupees, but it is issued to you at 400 rupees. The extra 200 rupees is income. Okay, because that exceeds fair market value. Any sum received as advance, if the sum is forfeited. So some advance money is received, but it is forfeited. That means you don't have to pay. Forfeited consequent to failure of negotiation of transfer of capital asset. That is also an income. Any sum of money or value of property received without consideration or for inadequate consideration. If some property is received without consideration, freely you receive something, or inadequate consideration, you have received a land at ₹1. So all these things are your income. Compensation or other payment due to or received by any person in connection with termination of his employment. If somebody's employment is terminated or his terms of employment is getting modified and he is given certain compensation, that is his income. Then assistance in the form of subsidy or grant or cash incentives, duty drawback or waiver or concession or reimbursement. So all this money received from government, state government, central government, or any other authority. Okay, all of them will constitute income.
Sir, duty drawback means?
Duty drawback means certain, let us say one organization, while you can say importing certain things, he has to pay duty, customs duty. In certain situation, he can withdraw. That means he'll be given it back. Okay, if that money is received. Situation is like that. Let us say you are exporting something and importing something. You are imported, you have paid custom duty. When you export it,
Yes, sir.
okay, there is a possibility, subject to fulfillment of certain conditions, the duty which has already been paid to you will be paid you back. That is called as the duty drawback.
Okay, sir.
Understood? So
Yes, sir.
these are various kinds of income. Yeah. Now you have understood. Once you have seen this definition, you know the definition is very wide definition. It includes almost every kind of receipt, every kind of revenue receipt, you can say. Inclusive definition. And the nomenclature doesn't matter. You may give any nomenclature. But if the nature of income, or you can say if the nature of that transaction is an income, then it will be included as an income. Okay. Did you understand?
Yes, sir.
Did you understand the definition?
Yes, sir.
This is the definition of income, which is provided under Income Tax Act 1961. And you need to understand few more concepts relating to that. First concept is that you see, as some of you might be knowing, all receipts are not income. Okay, so normally we compare it, income and receipts, compare it with the analogy of tree and fruit. Fruit is income, but tree is a capital receipt. Okay, that means suppose, let us say, you can say, suppose you have planted a tree and every year tree will be producing some fruit. If you sell the fruit, then you are getting income. Okay, but if you cut the tree and sell it, that means what has happened? You are receiving something by selling the source of income itself. That is a capital receipt. This is how we can distinguish whether it is a capital receipt or a revenue receipt. Okay.
So
So now
capital receipt are also treated as a income,
in certain
right?
situations, yes, it is certain situation, it is treated as uh, income. So I'll be telling you that normal rule is that you have to remember all revenue receipts are income unless it is specifically exempted. Did you understand?
Yes, sir.
Did you understand this?
Yes, sir.
The moment it is a revenue receipt, it is definitely income unless it is specifically exempted. Okay.
Yes, sir. Yes, sir.
Now, other way is that all capital receipts are normally not an income unless they are specifically included.
Okay, sir.
Are you getting?
Yes, sir.
So revenue receipt definitely it is income, but if exemptions are there, then they are not income. But capital receipt definitely they are not an income, but if it's specifically included, then they are income.
Okay, sir.
Did you understand? I'll show you some examples.
Yes. Yes, sir.
Just wait for some time. And as I told you, how to distinguish what is revenue receipt, what is capital receipt. Please compare it with a tree and fruit situation. And in that context, we have to remember receipt arising from sale of source. That means if the source itself is sold, that is a capital receipt. Normally, it's not an income. But income flowing from the source, just like a fruit, that is an income because that is a revenue receipt.
Yes, sir.
Okay, that is a normal
Yes, sir.
thumb rule, you can say. Right. Income or receipt from sale of the source is not an income because that's a capital receipt. But income generated from that source, that is a revenue income, that is 100% an income. When that is the
Yes, sir.
normal rule, what has happened? The act has widened the scope. Both the scope has been included by expressly including certain receipts. Expressly certain receipts, even if their capital receipts are included, and accordingly, those will be considered as an income. So certain capital receipts are specifically included within the meaning of income, like certain capital assets, winning from lotteries, gifts more than 25,000, more than 50,000, etc. They're specifically included. Accordingly, they become income, even if they are of capital receipt. They are of capital nature.
Yes, sir.
Right? And here you have to remember, it's not the gross receipt.
Yes, sir.
It's the net receipt, that is after deduction of all connected expenses. It's a net receipt which is taxable. Okay, let us say you have received some money and you
Yes,
have
sir.
spent some money also. So only the net amount will be taxable.
Yes, sir.
Okay. Now
Yes, sir.
we'll be understanding few concepts of income, certain principles you can say. First principle is that it is principles means most of these things are decided on the basis of certain case laws. On that basis, we are saying that you can take it as a principle. Income includes negative income. That means loss is there, that is also income, that is negative income. Okay. Regularity, for example, if you say income doesn't include negative income, let us say you got two businesses. One business you have got a profit of 5 lakh. Another business you got a loss of 1 lakh. The moment I say
Yes, sir.
income includes negative income, that means 5 lakh,
Okay, sir.
then plus loss, plus means minus loss of 1 lakh, your net income
Minus
is
1
4
lakh.
lakh. But if I say income doesn't include negative income, that
Yes,
means
sir.
negative you have to exclude, you have to pay tax on 5 lakh. Did you understand?
Okay, sir.
So
Yes, sir.
income includes negative income. Regularity is not important. Regularity indicates that it's a kind of income. Even if you are getting a single, you are doing a single transaction, still it may be constitute as an income. It is not necessary that all income should come regularly on a periodic basis. Let us say you talk about salary income. Normally, there is a regularity in that. But lottery income, there is no
Yes, sir.
regularity. Okay. So regularity cannot be considered as a basis. Forms of income is also not important. It is not necessary that all incomes should be received in cash. There might be some income which might be received in kind. Let us say somebody is donating you some asset, that is also income. Okay. And there is no
Yes, sir.
difference between legal income and illegal income from income tax point of view. So any tinted income, illegal income, there is no difference. Okay, legal income, illegal income, both are taxable under income tax law. If it is illegal income, you have to pay the consequences under different law. But so far as income tax law is concerned, you have to pay taxes. Okay.
Yes, sir.
Now, one more thing we have to understand the concept of application versus diversion of income. Friends, we have to understand here, applications are taxable, diversions are tax-free. Application means you voluntarily applying your income for certain purposes. Okay. Diversion means before income comes to you, it gets diverted. Are you getting the difference? I think I need to explain you this concept. What is application? What are diversion? Let us take an example. Okay. Just give me a second for this. One second. This whiteboard is visible.
Yes, sir.
Yes, sir.
Let us say, are you able to read it? Let us say Mr. A has donated some property to you. Okay. Let us say you are Mr. B. Okay. And
Yes,
every
sir.
year, are you watching it clearly?
Yes, sir.
To be, and every year you are getting some income from this. Let us say some business is donated to you, some income you are getting. Every year you are getting some income.
Yes, sir.
Okay. So that is your income. Is it
Yes,
not?
sir.
Let us
Yes,
say
sir.
what you are doing. Let us say for something, Mr. A has passed away and his wife is there, Mrs. A. And you feel that because of A, you are getting so much of income. And every year, let us say you are getting 1 lakh rupees. Every year, 50% you are paying it to Mrs. A. Did you understand?
Yes, sir.
This is the situation which will be called as application. That means you are applying your income to pay to Mrs. A. Mr. A has not told you to pay.
Yes, sir. No, sir.
He has not told you. So therefore, you see, out of 1 lakh, you are paying 50,000 rupees. But this 50,000 is also taxable for you. Your one income 50,000 plus
Yes,
is
sir.
50. Total 1 lakh, entire thing is taxable because you have applied. Are
Okay,
you
sir.
understanding? This is called application of
Yes,
income.
sir.
On the other hand, if I say, Mr. A has made a condition that I am transferring the business to you, but every year out of the profit, you have to transfer 50% to his wife. Let us say that is the condition. It's a conditional transfer.
Yes, sir.
In that case, what happens? Mr. B is receiving 1 lakh, but there is a condition that it has to be transferred to Mrs. A. Okay,
Yes, sir.
that means before income comes to Mr. B, there is a diversion clause. It has to be diverted to Mrs. A. If that is a diversion, then that is not an application. Diversions are not taxable. That means in this case, Mr. B will pay on 50,000, Mrs. A will pay on 50,000. Mrs. A's income is 50,000
Yes,
and
sir.
B's income is 50,000 because remaining 50,000 he has received, but it has been diverted by the donor has diverted that income.
So here B will pay tax upon only 50,000.
Only 50,000.
Okay, sir.
And A will pay on, so A is no more, Mrs. A will pay on 50,000.
50,000.
Why it is there? Because it's a diversion. So diversions are not taxable. This amount is diverted. This is not taxable for B. It is taxable for Mrs. A. It's not taxable for B because she has diverted the income. But if it is applied, that means there is no condition, but voluntarily he is paying. Applications are taxable.
Yes, sir.
Did you understand?
Yes, sir.
Okay.
Yes, sir.
Okay. Thank you. Just a minute. Let me share the screen again. Right. Now, application versus diversion you have understood.
Yes, sir.
Right. Disputed income. Income might be disputed. Disputed incomes are also taxable. They are also income. Taxable or not, it depends whether that income. Even if there is some dispute, let us say you got a house property, there is some dispute. But income, if chargeable, that will be taxed under the head income from house property.
Okay, sir.
Okay. Then
Yes,
contingent income. Contingent income means income which is
uncertain.
subjective.
Yes, sir.
Okay. They are not income till the contingency has happened.
Yes, sir.
Okay. Let us say it is agreed that if you sell 100 units, you will be given a commission of 1 lakh rupees. Unless you have actually sold 100 units, that 1 lakh rupees is not accruing to you. Isn't it? Because the contingency has not happened. That income is there, 1 lakh rupees, but that is contingent.
Yes, sir.
That is contingent upon sale of 100 units of product. You cannot say, you see, I have already sold 50, out of 100, I have already sold 50 items. So my income is not 1,50,000 rupees. You cannot say like that. Because that contingency has not happened. Consequently, income doesn't
Not.
arise now. Did you
Yes, sir.
understand it?
Yes, sir.
Now one more concept we need to decide, need to talk, that is about the basis of income. How we are going to compute income. I'll be telling you computation steps on the various chapter. You see, there are 2 heads of income. Already you know, in total there are 5 heads of income. Can you tell me what are these 5 heads of income? We have already discussed it while learning total income. Can you tell me what are these 5 heads?
Sir, salary,
Income
Okay.
from salary, income from house
capital
property.
gains, house
At that time
property.
also, I had already told you, please remember the title of these heads properly. Again, I am giving you this task to you. Is there anything which is called as the income from salary? Okay, you please check it. Okay, please update yourself. Please tell me the exact rate. Next class you will be able to tell me, right? So 5 heads are there. Okay, what are the exact title? The head is called as what? You can refer to Income Tax Act, then you tell me. Okay, who can tell me right now?
So salaries,
Okay,
income from house property,
good.
capital gains,
Okay,
profit and gains of business or profession,
very good.
and income from other sources.
Okay, so these are the 5 heads, right? So how we'll compute that income for these heads, these 2 heads, that is PGBP and IFOS. What is PGBP? What is IFOS?
Gain
Property and
from
gains
the
of
income
profession.
from other sources.
For these 2 heads, the basis of income, how to compute it depends on the method of accounting. That means you may follow your own method of accounting to arrive at the profit. Then income tax law will say certain things will be allowed, certain things will be disallowed. Accordingly, you can make adjustment. So your computation depends upon your method of accounting. But for all other heads means salaries, then income from house property and capital gains. So other 3 heads, how income is to be computed, Act has specifically specified that this is how we will be computing income. Okay, how income will be computed, that has been explained. Right, so your method of accounting is not relevant for other heads. They are relevant only for PGBP and income from other sources.
Yes, sir.
Right, now, well, there is nothing like permanent income and temporary income. All income, whether you are receiving on permanent basis and temporary basis, all incomes are taxable.
Taxable.
Gift, if it is more than 50,000 rupees during the financial year, that is fully taxable. If there is composite income, now composite income means if your income from various sources, you have salary income, you have, let us say, business income, you have, let us say, some interest income. So various sources income is there. So you have income, all these incomes needs to be aggregated to arrive at the total income. Right? Pin money is not an income. Pin money is the money which is normally given by husband to his wife to manage the household affairs. So that is money paid by husband to wife, that will not be considered as wife's income. But if your wife invests that money and earns some income, then that will be wife's income. That is, a wife is investing that pin money in the stock market and earning some money. That will be taxed under the head capital gain, short term, long term, it depends on that. Let us say wife have invested that money in some property, then naturally that income is also wife's income. But pin money itself is not an income. Did you understand?
Yes, sir.
Lump sum receipt. It doesn't matter whether money is received in lump sum or money is received in installment. It doesn't matter. Lump sum receipt can also be income. Let us say pension. Pension is a regular receipt, but there is a possibility that you may commute your pension. You may receive the entire pension in one lump sum, and it will be taxable. Because it is not taxable or not, I will not say right now. It is an income. You cannot say I received in lump sum, it is not an income, it is a capital receipt. No. Nature of this receipt is revenue receipt. Consequently, it is an income. Okay.
Yes, sir.
Now, one more concept also we have to learn, that income is something which must be received from outside. You cannot generate profit from yourself. You cannot sell something to yourself. Okay. So income must be generated from outside. So therefore, let us say you 5 of you collect some money and going for a picnic. Everybody contributed, let us say 500 rupees, and you went to picnic. Your total collection is 2,500 rupees, but total spending is 2,000 rupees. 500 rupees your surplus. It cannot be said that 500 rupees is the income of that association of persons. No, that is the surplus, because you are not doing any business with outsiders. Okay, you are contributing and you are participating. You are only dealing with yourself. So therefore, surplus of club, mutual associations, etc. are not income. Did you understand? But if you do business, there is some outside activities are there, then that will be income. Is it clear?
Yes, sir.
Okay. Similarly, voluntary payments. Suppose normally some money is given to you by a friend, stranger, etc., etc. Okay, even if, or maybe for charity, etc. Normally not an income, unless except in some specific circumstances, even if these payments are made on regular basis. Okay. Similarly, received by pure chance. By chance you received something. Normally not an income, but in certain situations specifically they're included, just like lottery income is included. Then compensation for death, accident, etc. Death and accident, that is not an income. Received from life insurance policies. Normally not an income. Some specific situations are there which can be considered as income. It depends upon the policy value and the premium contribution. Charity levies, sometimes some shops, you might be knowing some shops, restaurants, etc. collect some small amounts from customers for some charity purpose. They are called as charity levies. So these are the small charges to customers for clients for each transaction. They are not income. All these things are not income. Embezzlement, let us say misappropriation of cash. Somebody has embezzled some asset, misappropriated some asset. So this is the income in the hands of embezzler. Okay, did you understand?
Yes, sir.
Let us say from your office, from the cash box, somebody has taken 1,000 rupees. Somebody stolen 1,000 rupees. That is his income. He'll be punished under different law, but under income tax law, that is his income. Then friends, award reward. If this award and reward is given by the central government, state government, or approved authority in public interest, then they are exempted under section 10. Otherwise, they are income. All other awards are income. Similarly, scholarships. If scholarships are given to meet the cost of education or incidental cost of education, that is exempt under section 10. Otherwise, that is income. Okay. And friends, here you have to remember there is nothing which is called as a tax-free income. There is nothing called as a tax-free income. Income is taxable. When I say tax-free income, that means what has happened? There is maybe possibility that somebody might be paying tax on your behalf. Let us say your company say, I will pay you tax-free income of 10 lakh rupees. That means company will pay tax on your behalf. In that case, what is your income? Your normal 10 lakh rupees plus tax that is paid by company. That is also your income. So in case of tax-free income, then the tax which is paid on your behalf, that will also be treated as income, and consequently, your total income needs to be grossed off. And on that gross income, tax liability is to be computed. Did you understand this concept?
Yes, sir.
Okay, thank you. Okay, now we have understood broadly what is income. Now quickly we'll be understanding the chargeability concept. The chargeability concept, what is chargeable income, that dealt in section 4. You see, income of the previous year is charged to tax in the relevant assessment year. In the assessment year, it is be charged to tax, but you know, exceptions are there, advanced tax provisions are there, TDS provisions, etc. are there. The rate of tax is specified in the Finance Act or in the Income Tax Act. At that rate, it will be charged. And where required, tax is to be deducted at source or advance tax needs to be paid. Okay, friends. I think you got a broad idea about what is income. Friends, we also need to understand the difference between capital receipt and revenue receipt. What is capital receipt? What is revenue receipt? Because That concept is important because through that thing only we'll be able to distinguish what is income, what is what is not an income. As you know, capital receipts are normally not an income unless they are specifically included. And revenue receipts are
specifically
normally income unless they are
normally income.
okay. So what is capital receipt? What is revenue receipt? I'll be telling you in the next class. At this stage, just have a broad idea. You see, these are certain tax-free revenue receipt. They're revenue receipt, but they're specifically made tax-free, like agricultural income, share of income from farm, okay, dividend from Indian companies, subject to certain conditions. So these are some tax-free revenue receipts. Similarly, there are some taxable capital receipts are also there. You see, these are some taxable capital receipts, capital gains, compensation for termination and modification of terms of employment. They're capital receipt, but they're still taxable. Did you understand?
Yes, sir.
Okay. So this is a broad understanding of what is capital receipt, what is revenue receipt. You can always compare it with the tree and fruit so that you can easily take decision. And coming to capital, there is something called the fixed capital and circulating capital. I'll be explaining the condition. And how to test whether the receipt is the revenue receipt or a capital receipt. We'll be applying certain tests. With that, we'll be clearly understanding what is revenue receipt and what is capital receipt. After that, we'll be able to understand how to compute income. As you can see on the slide, these are various steps of computation of income and how to merge agricultural income also we'll be learning. Okay. Then few more concepts we'll be learning, that exemption, deductions, etc. And as you know, this is the, you can say, very basic chapter we are learning. So we have to spend some time on the basic chapter. Once the basics are over, then I will get a message that you are in a position to understand the income tax law completely. Then we'll be going to residential status and chapter, or each chapter will be learning. The purpose of going slowly in this basic chapter is that you can get little interest, you can understand, you can get a very broad idea about all the concepts of income tax law. You can show some interest and you can involve yourself. You can visit to the income tax website and learn all these things yourself. Okay. So do you have any query? Otherwise, we're going to wind up our show right now. Any doubt you have?
No, sir.
Okay.
No,
Thank
sir.
you. Thank you very much. So we'll catch up in your next class. Thanks a lot.